Hello everyone and welcome back to another fresh part of our Market View series. In our previous week's Market View series, we had a bearish outlook on Nifty and also discussed the possibility of Nifty meeting with selling pressure around the 18,800 to the 18,900 area. Nifty did sell off sharply after making a high of 18,794 levels on June 15th. However, it was quick to bounce back equally sharply from the 15th June low. Consequently, the tug of war between the bulls and the bears continues, keeping traders on both sides guessing for a probable direction. As of 18 June 2023, the time when we are recording this video, Nifty is trading right at the resistance point, albeit with a bullish candle. The RSI levels of Nifty are at 65-66, which points towards a strong upward momentum. While the odds are in favor of the breakout happening, we would not be comfortable buying right away in anticipation of the same. We would wait for Nifty to break the resistance level with some conviction, preferably on some good volumes to change the stance from being cautious to optimistic in the near term. Alternatively, any bearish signals, again at this resistance point, would be looked at negatively, as it would mean the bulls are being trapped. On Nifty, we would recommend a wait and watch approach without being impulsive. On the other hand, Bank Nifty continues to trade with a sideways to slightly negative bias just by looking at the price action in the last 1 week. This is mainly attributed to some of the major banks like ICICI, SBI, HDFC and many more that are underperforming to a great extent. On the charts, the price action in all these banking stocks continues to suggest a sideways to a negative bias in the short term. If these banking bellwethers don't perform, Bank Nifty overall would also continue to trade with a sideways to a negative bias. Swing and positional traders in Bank Nifty should wait for a clear break in either direction after the weekly doji formation around the earlier resistance of 44,151. Intraday traders, on the other hand, can look to play both sides of the market, buying around the 43,455 to the 43,400 and selling around the 44,400 to the 44,460. These are major areas of support and resistance, respectively, based on the 60 minutes chart. To summarize, traders should wait for a decisive break to happen on Nifty to position themselves on the long side or a bearish confirmation around the current resistance area to position themselves on the short side. The verdict on Nifty's direction should be out by next week. Traders can look to play the Bank Nifty index from an intraday perspective on the levels we mentioned earlier. The daily, weekly, as well as the monthly charts continue to be sideways and are not pointing towards any clear direction. And with that, we can effectively wrap today's video up. We look forward to meeting with you again next week with a fresh view on the indices and new trading levels. Hopefully, by next week, markets would offer much needed clarity in terms of price action. Thank you all for joining us this week. Until then, happy trading and investing. If you missed our market update last week, be sure to watch that as well. The link to last week's market view is on your screen and in the description below. Also, if you would like to learn more about our offerings at Hedged, we would highly recommend you do so by logging in at www.hedged.in today. Feel free to join our Telegram group called Hedged Ideas and stay up to date with the markets for free. The link and the scanner to join the group are on your screen and in the description below. Thank you.